give us a sense of, do you think it's really justified, the excitement we are seeing, particularly in the banks? We've seen many of those banks rally all this week.
Yes, thank you, Wole. Well, I think the way to put it is the market is back. What held down the market was the margin loan crisis, and which then caused the banking crisis. So AMCON have come to say, look, they will buy the shares at 60% on the weighted average price over the last 60 days or up to November 15th. So the excitement is real. I think it's justified. I think that the stock market will recover. Well, not all from the highs of 2007, but I mean I see the market closing up maybe 40% by the end of the year. So the excitement is back.
Indeed,
I think setting the market to reprise by about another 20% before the end of the year.
I think that would be exciting to many people holding equities, most of those that bought 2 years ago. Well, let's talk about the AMCON bond issuance now. They're saying they would issue bonds well over 2 trillion naira to buy up those 2.2 trillion naira in loans, bad loans. What's your sense of how this is going to impact the bond market in particular? Because I know that pension funds are heavily invested in bonds.
Well, I think what AMCON is looking to do is to swap those bad loans for zero coupon bonds. So on day one, those bonds will be sitting in the balance sheets of banks. But I suspect that the banks, particularly the rescued banks, will need liquidity. So they will begin to trade those bonds. And some of those bonds will then end up with pension fund portfolios. Now, the interesting thing is that they are going to issue zero coupon bonds. This is an instrument that is, well, a bit new around here. But, by way of just understanding what it is, it's no different from any other bond. It's just that it doesn't pay coupon, every 6 months. So it's back end. In other words, it's sold at a discount to the face values. And once you price that in, and again, it's interesting because I understand it to be listed on the NSE. Right. So that means that it will be traded. And I think the point that has been made is that since AMCON is looking to issue like anything between $10 and $15 billion in bond. If it's one series, it's going to be a very big bond. It's going to be very liquid. So that will create another excitement, in the bond market. If it's traded on the NSE, I think pension funds will look at it seriously.
But is it positive excitement? Because there's a view that yields are likely to go up significantly because of the overhang of supply.
Well, yes. I mean, what I would say is that it depends. Again, it depends on what happens to the currency, and I'll tell you why. Because of what has happened in the U.S., the so-called, Q2 means that dollar investors are looking for returns, and obviously emerging markets is the destination to go to. Now, if the currency holds firm, which I suspect it might, trades around the 150, 155 region, yes, there will be a lot of monies coming in to take advantage of improved yields. We are seeing yields of between 10 and 13%. 2 weeks ago, it was even up to 14.5%. So there might be a glut in the market, which will mean that yields will go up. But if you moderate that with the expected inflows from foreign portfolio investors, so I don't think that a spike where maybe 100, 200 basis point increase from where we are today is what we're going to see.
I think some people will call that a significant spike anyway.
Well, if you look at what the DMO has done and what I've got, so next year we're going to see maybe about 22 to $25 billion in bond issuance between now and next year. That's a lot in this market, given that, again, banks will start lending. So banks that used to buy some of these bonds to sit on them will no longer do that because they will have to, obviously their business is to lend to the real sector, which before now the appetite has not been there. Once AMCON cleans up their balance sheet, they have the liquidity freed up, again, the balance sheet freed up the capital to lend. So AMCON is basically going to remove some dead bodies from the market, which what I call those things that have been sitting there. So the excitement is real. For the bond market, it depends. My view is that it's a good time for bond investors, particularly for long-term portfolios, pension funds, because we're going to see bonds that give us positive return on deflation.
So just summarize now, how does it have impacts on your asset allocation as a pension fund manager?
Well, okay,
where do you underweight, where do you overweight?
Well, clearly we're fully invested in equities, to take advantage of the rally in the market. We will, I think that pension funds now we have to stay somewhat in some cash, because when things like this happen, you have to see where the market is going, because you don't want to take a hit on your bond portfolio. So I think that interestingly, interest rate in the money market has been going up. So we stay a bit in cash. We'll be a bit underweight bond, and until we get clarity on the AMCON issue. In terms of overall, I think that yields on pension portfolios will increase relative to what it was either this year or last year going into 2011. Again, we have to remember that there's an election next year, which sort of complicate things. But I think in summary, I would say that we'll be overweight or fully invested in equities. We'll be slightly underweight in bonds, and we'll stay in cash until we get some clarity.